One question we get a lot from our viewers, subscribers, our clients, followers is how much money should they start with before investing? And we're going to answer that question in this video. Now, this applies a lot more to people in their 20s and 30s, but it also applies to you if you are older, especially if you haven't started investing yet. So this is not just for 20 to 30, but it applies a bit more to them.
Yes.
Too busy to find stock ideas? Check out FIRL Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description.
So we'll be answering the one of the most asked question, which is how much do you need to get started investing in stocks? So our answer is very simple. It is how much are you willing to pay for your failures? Yeah. So there's actually a reverse psychology in terms of this. So the reason why we say this is because most of the first timers will only consider this. So if let's say they invested like 10,000 ringgit and they make 5%, it's about 500 ringgit in profit. If they make 10%, it's 1,000 ringgit in profit. And if they make 100%, which is very, very good already for first timers, it's basically double. You make like a 10,000 ringgit in your original investment. So they will be only thinking about how much can I win from stock investing, not really about how much will you lose in investing. So many people would not consider this. Like, what if your 10,000 investment, you invested in the wrong stocks because you never do proper due diligence? So your returns is basically zero. Yeah. So the question or the answer to your question is basically how much are you willing to risk in order for you to, invest in the stock market. So you want to add anything on this one?
Yeah, this is very true. So it also applies to people who say, if a stock dropped 50% already, how much more can it drop? The answer is 100%. Really, it can. And one very helpful thing, one of the worst things actually that can happen to you in your first year of investing in the stock market is to make money, right? I'm actually very fortunate that I only made 2% in my first year. And the reason is very important for that to happen is, you see, all of us, when we start something new, especially in something that is lucrative like the stock market, we are always excited. We are always positive, usually thinking of the best case scenario. And, it's fresh and we could be the one that is unique. But most of the time, you will face a lot of down years, right? Or at the very least, a lot of flat years. And if you go into the stock market in your first year expecting, or rather experiencing a gain in the stock market, so then that will be your anchor or your base in order to look forward to the rest of the years. So if year 2 is also a good year, wow, that's even worse. Because potentially year 3, year 4, you will lose, and then your expectations will be, incredibly bad. So, of course, you cannot control the market. Sometimes maybe your first year, you are going to make money even though you're cautious. But the key approach is to go in recognizing that you could very well lose money in the first 2 to 3 years, right? People don't think of it like a business. Yes. But most businesses in the first 5 years is just keeping afloat, keeping their nose above water. But somehow in the stock market, they see differently. And so when they go in and invest, and then the first year they make money, they think that is how things work, or if they lose money, they give up very quickly.
Exactly. That's what happened in COVID-19.
Yeah, exactly. So many people just gave up because they didn't lose. They first of all, they never learn how to invest. And then their first time they get punched in the face, they give up, right? But I think if you learn any martial arts or boxing or whatever, you know that, getting punched is a very normal thing, right?
Exactly. So consider this. Always the downside matters more than the upside. So that should answer your question. But more importantly is you need to have some sort of like attention span to research companies.
Yeah.
Because are in this like field, right? They just want for get rich quick.
So for those of you all who are unaware of what we do, or you've been following us but you're not sure exactly what products or services we provide, what we actually do is we help people to do research. And we have a whole research team helping us. But maybe, Jonathan, you give us a sense, right, of like one company. Let's say it's a fresh company, right? You don't know the company at all. You just heard the name. And how long do you think you will need to do optimal research, right? Where you can never understand everything, but how much, like to the point where, now I can start making decisions.
At least a few months, like 2 to 3 months.
Wow.
Yeah.
And like how do you break that down? Like why is it 2 to 3 months?
Yeah. So the first few days is usually because you don't know much about the company. So what we will do is that we will look at their numbers first. So we will tabulate the numbers from the annual report since day one. If let's say they got prospectus, that will be the best because prospectus tells us a lot of details that might not be shared inside annual report. Yeah, it's where they actually disclose naked everything. So that's number one. We want to compile all of the numbers income statement, balance sheet, and cash flow. And usually it will take like probably weeks to compile every single one, assuming like let's say it has like a 20 annual report, 20-year annual report, right? So that's the first one, numbers. Then the second one, or at least the second week, it will be reading the annual report, the management discussion, the chairman's statement, sometimes even let's say if there's like auditors' comments and all those kind of things, right? It's all the information that we need to like understand historically what has happened in this company, because history tells us how has this management executed in terms of their decision, their track record, are they walking the talk, and all these kind of things. So that actually takes like another few more weeks to understand the management. But that is only like secondary source kind of like research. Then we also need to go through some sort of primary research, which is, meeting management. So you can go through AGM, you can meet analysts who cover the stocks. If it is even more difficult, because you will need to email to the management to see whether they can actually want to meet you or not. Most of the time, they won't meet you one. So it is actually through connections, through whether is it investor relation or maybe somebody, employees working inside there that we know of the employee. That's how we get access to the management. So that also will take like probably another few more weeks to research. And then the third week, or probably it is going to be a month already, is you need to sit down and start to think about this company and its competitors. So it's not only just like this company, but you also need to understand which value chain are they in, and also how are their competitors like performing. And then I think the last few weeks, it is actually thinking about this company, what is their prospects, or what is the true risk. So there's a lot of like diggings that require a long attention span when you research just one company.
All right.
Yeah. So that is basically it. But yeah, what about you?
Yeah, it's correct, I think. But don't get us wrong, like this is on the assumption that you're starting from zero, right? But the thing is, as you keep going, you will never start at zero. Especially if you hop onto FIRL Pro, right? You will start not at zero, you'll start a lot higher. Because if you keep learning and if you keep reading and researching, right, what happens is that, okay, let's say like this company that you don't know, they're in the, palm oil industry, right? So you do a lot of 2-3 months research. And it doesn't mean that the next palm oil company is also 2-3 months, right? Because now you know a lot of things about the palm oil company already. And in fact, it will speed up a lot, right? And sometimes, even 2 weeks is sufficient, or 1 week, because now you know the production levels of company A, the first company, and then company B. You sure we can compare, you can compare margin, you can compare management-wide, so it's very fast. It shortcuts, right? So there's like 2 types of intelligence, right? I just learned. And the first type, and usually when you're starting out, this is where you are, it's called fluid intelligence. So you have to be very fluid, you have to be very step by step, you have to go through everything to know about the company, all right, or the industry, let's say. So then the second type of intelligence, which is the next phase, is crystallized intelligence, meaning now because you have data, right, you've gone through all the fluid intelligence to gather data, understand insights. So you now have what we call crystallized intelligence, right? You already have a library or a bank of information data they can bring into the next one. And so as you progress, you will get more crystallized information. So that's how things work, right? In terms of learning.
Yeah, exactly. And especially if you talk to like fund managers who has been in the field for more than a decade, right? When you talk to them, right, it's very different, because immediately they will know whether this management is good or not. Because they already have like decades of experience meeting the management. So they already know whether are they like really BSing, or are they like worth trusting.
So to your point, right, it's very interesting, because when you talk to someone new, or when you yourself are new in analyzing a company, right, you will realize there's like 10 or 15 different factors, right, that can affect the company. But when you talk to some of these more experienced and successful fund managers, they'll ask you about the stock, and then they will give 1 or 2 word answers, right? They'll say like maybe the management is that, or they'll say something like too many competitors or something to that effect. But then you as a new person, you might say, oh, but then what about this? What about that? The unit economics is good, even though management is bad, whatever. So what that older and more experienced fund manager is really doing is that he has actually gone through your 10, 15 factors, right? And he has gone through the pain of wondering what matters and not. When he tells you that 1 or 2 sentences, he's telling you what matters. That's it.
Yeah.
Right. And some of them, they don't know this also, right? So they just say, oh, no, management bad, or the too many competitors, whatever, right? They've actually zoomed in for you what matters, because they know that industry, competition matters. Some industry, you can have a lot of competition, but you can still do well, right? Some industry, you don't need good management and you can still do well. But when he says that, he's telling you, this industry, this company's management is very important. So pay attention.
Yep, exactly. And that is also how Charlie Munger managed to succeed in life. And he said that he did not succeed in life because
Mhm.
of intelligence, but because he have a very long attention span. So that is very key. If let's say stocks is something that you wouldn't spend a lot of time researching about it, then maybe stock investing is not for you lah. Maybe you can like try out what about property, what about crypto, what about Pokemon cards.
Yeah,
Just find out what asset class interests you. I think that's what matters than
yeah,
making
100%.
money. Yes. And yeah, if you want to know more, we actually talk a lot also
Yep.
about personal finance inside this book over
Yep.
here, 100K by 30. And I think MJ's, was it like chapter 1, n equals to 1?
Yeah,
Yes.
correct. Yeah, so n equals to 1, just to give you a teaser, it's basically saying that, I know this is not an answer you all want. You all wanted to answer like start with 10,000 or 20,000, but n equals 1 means that you are one individual and you have unique conditions, unique risk appetites, unique psychology. So some people, 1,000 is what they should start with because maybe they're afraid of the gyration, right? They want to just get
Get
you
a
know, they
feel, get a feel.
feedback.
Yeah.
Some people, maybe they got rich parents, 300, 400, 500,000 to start with. And that's okay, right? Because if they lose all of that, they still got a house, life goes on. So really figure out what you're emotionally prepared, right? Like question number 1, right? What are you emotionally prepared to lose with? And that is a great starting point.
Yes, exactly. And you can order this book in any of the bookstores in Malaysia, Klang Valley. East Malaysia, I'm not sure whether there is.
Yeah, but I believe so. Yeah, I'll need to check.
Yeah,
but most of the bookstores will have it.
Yeah, but if you are like international, like people like watching elsewhere, which is not in Malaysia, we have like a link over here in the description and comments where you can order the book over there. Yeah, if you have trouble like, buying this book, you can just email us at hello@FIRL.co. We will be happy to help you out. And you only can learn all of this information for a very low price of 55 ringgit. It is a very, very good investment for you to know how to improve your personal finance. And if you want to know how we do our research, if you want to get ideas like fast, right, or straight away, this is where you can actually dip your toes into the sea of information, because this sea is inside, is what FIRL Pros is all about.
Yes.
It's where we share, company insights very fast and relevant, because you can have a lot of information in the internet, but most of them are actually noises and it might be irrelevant for your analysis. So FIRL Pro is where we, shift off all of these irrelevant noises, and then we just tell you what matters and whether it is important for your investment decision. And if you want to know how we do our write-ups, well, we have like a sample write-up which we're going to be sharing you guys later on. But we have almost close to 100 of write-ups of companies already. And we also have close to 400 management notes, which is information when we meet management, because some of the insights are not said or told inside the annual report or quarterly report, maybe because there's a word count or they are not comfortable sharing in the public report. They're only comfortable sharing with one-to-one meetings. So if you want to get all of this information, it will be inside FIRL Pro. And so far, we have like 3 portfolios over here. We have Malaysia, Global, and Boring. So all 3 also is cater for 3 different purposes. If you like Malaysia stocks, it'll be the FPM. If you like global stocks, you like China, you like US, you like Singapore, it'll be the global stocks. And if you like dividends, that is where our Boring portfolio is here for your reference. And if you want to see how we do our write-ups, it'll be inside the free sample. And inside the free sample, we also share with you guys management notes. So there'll be 3 management notes, 2 write-ups, which is KGB over here. You can see how KGB has performed, and also Delium. And we also share with you guys 1 video in our SIB course. So if you want to know how to do yourself in terms of like research, right, or you want to copy our investing strategy, it is inside this stock investing blueprint program. And it's totally for free. The links will be in the description and comments.
And if you have any questions, you're not sure, you're not convinced, just an Instagram, DM us. You can go through email, hello@FIRL.co. You can comment on our YouTube channel and we'll definitely answer them. And guys, thanks for staying all the way until the end, and I'll see you in the next video. Bye-bye.